A powerful yet dangerous tool. Cash value life insurance. That's what we're talking about today. What's up, guys? Mike back at it again at Ledgerly, tax advisor, strategist, CPA, alongside my partner in crime, Andrew D'Amico, also a CPA, 2-in-1 package, bringing you the latest and greatest and hottest topics on the market when it comes to tax advising and strategy. And if you love this stuff, hit that subscribe button, and we'd love to see you here. All right, we're honing in on a highly debated topic in the industry today: cash value life insurance, also known as whole life insurance or universal life insurance. Now, full disclosure, I utilize whole life insurance. It can be a very powerful tool. However, you need to be ready for it. It is not a one-size-fits-all product. There's a time and a place where it makes sense, and that's what we're going to be digging into today. So cash value life insurance, you out there might have heard terms that there is something called term life insurance, and there's also permanent. So cash value is perm or whole life or universal. It can be talked about as one of the same. Now, the whole concept behind cash value is that you own the policy. So all of these is you own it. It's like a home, whereas term is like you're renting. A use it or lose it, if you will. Kind of like an FSA, use it or lose it. But today we are talking about the cash value concept. Now, some individuals might also say that cash value, whole life insurance, is almost like a big Roth IRA, because the money that you're putting in is post-tax dollars, and the money that you're taking out is generally tax-free, and it's growing and it's compounding for you. Now, got to keep in mind that the whole life is a contract. If you miss a payment, it's like missing a payment on your home. The policy could lapse. You could lose out on principal in your policy, earnings, dividends reinvested, the whole 9 yards. So we got to be careful. And all policies are not the same. That's why it's very important to do your due diligence. These type of policies can be sold by very reputable companies, or they can also be sold by piranhas in the water, because the commission on these policies for the agent, for the broker, are generally fairly large. So you want to make sure you're working with the right person and an ethical person. Speaking of that, shout out to my financial advisor. Not going to mention any names, but if you're watching, you know who you are. He's a pretty decent guy. Okay, again, full disclosure, we are not licensed insurance agents. We are talking about the tax implications on whole life policies. And for the most part, this is what it all boils down to right here. Now, us at Ledgerly have a step-by-step of when we think it is the right time to start thinking about a whole life policy or a cash value policy or a universal life index policy. Again, all one in the same. They all have similarities. They all have differences. But at the end of the day, they're all treated that you own this policy. That money is yours, baby. Okay, so when it makes sense for whole life. Number one, consumer debt. Let's make sure your consumer debt is paid down. Your credit card, maybe student loans, personal loans. Any type of debt that is not working for you, but instead is working against you. Consumer debt. Let's get that checked off. Number two, retirement. Let's build those IRAs, 401ks. Might have a SEP. You might have a simple. Let's build these up. Number three might be optional to you, but how about other passive assets? Maybe some brokerage accounts, maybe real estate, maybe some crypto. Again, number three, kind of optional. I'll put a little asterisk here. Once you have number 1 and 2 in place and your finger on the pulse of those, again, number 3 as well, optional. But once you have 1, 2, and 3 in order, number 4 is when we can start playing around with cash value life insurance. It's the cherry on top. So as you can see, there's a lot of great benefits, but then there's also some things to keep in mind before we want to jump in the deep end with cash value life insurance. Crawl, walk, run. Yes, cash value, for the most part, you're going to grow your money tax-free just like a Roth. Yes, it helps beef up that retirement stash because it's not a use it or lose it. It's your money. But again, like any type of strategy when it comes to tax planning, do your due diligence, do your research, talk to the right people, talk with your good friends over at Ledgerly, talk with a good financial advisor. someone that you can put your trust in, because the trustworthy people are going to be brutally honest, just like this video. Yes, is cash value life insurance a tremendous tool? Yes. But is it the right time for you? Get your debt in order first. Get your other retirement in order first. Second, maybe play around with some crypto, some real estate, some other fun stuff. Then let's have the conversation about cash value life insurance. A tremendous tool can also be a loaded gun. And don't let that recoil hit you in the face.